Hi there, welcome to Kneppy Invest. Time for a December quarter Appendix 4C video focusing on a company called Qoria. This company used to be named or called Family Zone a few years ago, and then they decided to change their name. Not sure why. I don't follow this company too closely, but to be honest with you, their old name Family Zone, I definitely prefer their new name Qoria over that old name. I don't know why. Maybe it's just the name Qoria. It just sounds intriguing, particularly because there is no U after the Q. So let's have a look at Qoria. For those who don't know what this company does, they just provide digital safety and student wellbeing solutions for schools and parents. Before we have a look at Qoria's December quarter results or Appendix 4C, we'll also have a look at the company's December quarter results from last year just to see how this company has progressed. And I'm telling you now, this company has progressed in the past year and it's getting very close to a very important inflection point that I'm always looking for, and that is being operating cash flow positive. The company hasn't quite got there just yet, but I think it's just around the corner. And to be honest with you, I think the market also believes in this company because at a share price of 23.5 cents, Qoria has a market cap of 264 million. So whenever a company that is unprofitable and is burning through cash has a market cap that high, it's telling me either there's a little bit of hype in the company or the market thinks there's promise. Now, in terms of hype, no hype in this company right now if you just look at the chart. In fact, the company's share price had been in downtrend during 2022. In fact, a well-defined downtrend where the share price fell all the way down to about 15 cents. That low was reached in late May of 2023. And ever since then, the share price has stabilized. And I'm waiting, almost anticipating for a breakout to Qoria's share price. And I think if that breakout coincided with a quarterly report where the company showed that they're operating cash flow positive or even free cash flow positive, I think that could lead to a breakout in Qoria's share price and the chart. Shares on issue have grown significantly since the company IPO back in 2016, increasing from 62 million to 1.12 billion. So that is a red flag. And this company has burned through a lot of cash since they listed about 8 years ago. Now, if they can maintain being close to operating cash flow positive, free cash flow positive, there is potential the company won't have to do many more capital raisings, if any, or moving forward. And the ticker for this company is QOR. Before we have a look at the most recent December quarter results for Qoria, let's go back 1 year just to see how this company has progressed by comparing the December quarter results 1 year ago to the current quarter results. And this company has progressed. Receipts to customers 18.1 million, which might seem a lot because if you extrapolate that over a year, that's $72 million of cash receipts in 1 year. That's a lot of money the company is generating. However, the company is spending a lot of money, particularly on staff costs. In the one quarter, they spent $16.3 million on staff costs. Big question I would have if I was doing any more research on this company is why do they have to spend a lot of money on staff costs? Do they need so much staff to maintain the business? I don't know. That's a question for the management. And obviously the management have thought about it and they said, yes, we need this much staff. But in this one quarter, the company burned through $8 million in cash. And that would be a little bit concerning because at the end of this particular quarter, the company only had $6.2 million of cash. So they would have had to answer some questions. If they kept on burning this amount of cash, they would have to do a capital raising. And in fact, they did do a capital raising. On the 9th of March 2023, they successfully completed a $20 million placement. So keep that in the back of your mind if you are interested in any company, not only Qoria, but any company that is burning through cash. Have a look at the cash on hand, and that could answer some potential capital raising questions you might have. So let's have a look at the December quarter results for financial year 24, just to see how this company has progressed in the past year. Now let's have a look at the company's December quarter results for financial year 24. And this company has progressed. They've expanded their receipts or grown their receipts up 7.7 million. But more importantly, they have put a little bit of lid on their spending. So manufacturing operating costs down 300,000, administration costs down 1.5 million. However, staff costs remaining elevated, in fact, has increased up 1.5 million from the previous corresponding period, and advertising and marketing costs up $600,000. But receipts have grown at a much greater rate than the spending, which means the company is only operating cash flow negative by 1.2 million. However, if you look at the first 6 months of the financial year, the company is operating cash flow positive. So this company is getting very close to that inflection point of being operating cash flow positive and free cash flow positive on a continuing basis. And that is a very important inflection point because that means the company can grow organically. They can sustain their growth without going back to the market for more money, which this company has done continually over the past 8 years. And at the end of this particular quarter, the company had $12.7 million of cash. So still burning through cash, but some of the reasons why they still burned through about $5 million of cash was because they were operating cash flow negative. They spent $1.1 million on capital expenditure and also because of acquisitions. One slight red flag in regards to Qoria I do have is debt. They have $21.5 million of debt plus $10 million of unused financing facilities. But they also announced just before they released their Appendix 4C, I think it was actually on the day they released their Appendix 4C, that they have extended the financing facilities to $37.85 million. Now, one of the reasons I do like Section 7 of the Appendix 4C or 5B is that we do get particulars of the company's financing facilities. So they have two financing facilities, but the main financing facility is with Ashgrove Capital Management. And we also know how much they have drawn and the interest rates. I'm more interested in the interest rates. So the term of the facility is 5 years, and the interest rate has been set at BBSY plus 8.7% per annum, with the ability to capitalize up to 4.25% per annum the first 2 years. So this company will be paying a fair bit of interest if they keep on growing their debt. And that's one of the reasons why I prefer companies like this not to have debt. Not only is the biggest reason, the most likely reason a company goes bankrupt is because of the debt, or they have too much debt to handle, is because of interest rate or interest payments. Now onto the receipts history for Qoria, going back to when the company listed on the ASX back in 2016. And when they did release their first quarter results, they only had $50,000 of receipts. So this company is definitely a growth company. They have grown their receipts from $50,000 in a quarter to $25.7 million in a quarter. In fact, in the September quarter, this company generated $30.1 million of receipts. So there's no question that Qoria is a growth company. Now, sure, some of this growth in receipts is because of acquisitions. That has definitely helped this company in the past few years, but there is without doubt organic growth within this sort of growth profile. That's all I have for this look at Qoria's December quarter results for financial year 24. The company is close to reaching that really important inflection point of being operating cash flow and free cash flow positive on a continuing basis. They reached that level in the September quarter. They stepped back a little bit in the December quarter, but I think there is potential. This company will be operating cash flow and free cash flow positive in most quarters moving forward. And that's a good sign for shareholders and good sign for the company. If you have any questions about Qoria, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.